Okay, quantum computing and AI stocks and some of these no-name stocks, they go up 10-20% every day. Okay, some of these things don't even have revenue. And then again, goes back to, okay, I have two choices. Well, maybe three. But the two are you participate or you sit, right? You definitely don't go short. I tried twice. Once I made money on Rigetti, once I got my face ripped, and then I made money again. So overall, I'm probably even. But if you fundamentals are out of the window, common sense is out of the window. There's just none of this makes sense. Okay, if you're a fundamental value trader, let's say, which you shouldn't be, momentum is a powerful thing. You got to catch it when you catch it. Then what? Okay, so for example, an IONQ or Rigetti goes from 60 cents to $58 in less than 6 months. Is there room to make money on the upside? For sure. But then if you're thinking fundamentals, I don't know what kind of crack you need to smoke saying that quantum computing is the future. I don't think it is. But let's look at fundamentals. Okay. First of all, you have to believe that profits, earnings, revenue is still an important metric to look at. Right? It is. The reason NVIDIA have done so well because their revenue is there, and top line is growing, bottom line is just full of cash and cash machine, throwing free cash flow. These are important things when you look at a stock. So when you look at a stock like OKLO, okay, AI, there's going to be massive power demand for AI. Okay, cool. What does OKLO do? They do small nuclear power generators. Basically, in every AI data center right next door or within it, there may be one of these little nuclear reactors that provides all the power, so we don't have to suck the grid dry. Okay. Stock is $3 at the start of the year and just hits 190. At 190, you put a $30 billion market cap on a company that has not built a single one of these things yet. I fully understand that stocks move, the price moves first and earnings catch up. That's a given. That's rule number one. And most stocks, by the way, don't go up every day. What they do is they go up, they consolidate, earnings will catch up, next leg will come up, next leg will come up. But as long as the earnings are coming, as long as the fundamentals are supporting the price, okay? And we have the reverse of that with, let's say, Lululemons or Nikes or UPS or PayPal or things like that. Okay. Well, when you take a stock like OKLO, who basically just has a drawing, I get it. Their CEO is now the energy secretary for Trump. I get it. Okay. Yeah, they may get some contracts. Okay. But when you put a $30 billion valuation on that company, how much of the future revenue and earnings are we considering into that price? That's how Wall Street works. You can ask every fundamental sell-side analyst. I've dealt with them when I was on the desk for 25 years. How's that work? What are we pricing in here? We're pricing in perfection plus, 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 plus. We're pricing in growth plus, plus, plus. This company has a drawing, has the patents for this little nuclear plant, mini plant. That's one. Quantum computing, same thing. Company like IONQ. Zero, well, maybe a little bit of revenue, maybe $5 million. I have changed my attitude about how to analyze things fundamentally over the years, such as analysts as well, because, TP ratios, CAGRs, and, all these things, PEG ratio, those are all out of the window. Because what happened is that we started analyzing companies for growth only, and again, growth analysis has become price to sales now, because that's why everybody calls Palantir expensive. Okay. So if Palantir is expensive at 300 times sales, this is 300 times sales. We're not talking earnings, PE. Where's OKLO? Where's IONQ? Where's Rigetti? There's no revenue. How am I even supposed to put a price to sales on this thing? So that's where we are. That's where the market's at. It's frustrating because I've seen the other side of the coin many times. On those names, I definitely think or agree with the X crowd that there is similarities between the dot-com bubble and today, for sure. Because that's what was going on. In fact, today's video's title is called The Greater Fool Theory. What's the greater fool theory? You buy something today, you hope another fool, you're a fool for buying it, but another fool is going to buy from you at a higher price tomorrow. That's the greater fool theory. Again, I'm not bearish on the market. I'm just, but in individual names, and they have become the talk of the town, right? But there's 8,000 stocks, 10,000 stocks out there. You can make your money by doing other things with other stuff. You don't need to participate in this, because if you do participate and day like yesterday shows up, right? When these stocks from their highs already are down 20%. And that's why these folks' accounts are down 20%, because they're all loaded with these stocks. The way up is fun. The way down is also going to be painful. So that's all I'm trying to say. That's all I'm trying to warn. That's all I'm trying to, communicate to my chat group on Telegram, my members group.